This is FX Insights with CIS Trading at thinkorswimtoolkit.com. Introducing an indicator toolkit for TradingView.com charts. In focus is the British pound and the Swiss franc. On March 1st, 2018, I published a video on my YouTube page at CIS Trading where I discussed the Swiss franc relative to the US dollar Chinese yuan trade. What we were looking at was this bearish spinning candle on this British pound Swiss franc where we've consolidated and traded inside the range of the high and the low of that bearish spinning candle. Last week we started to make a move just above the high of that candle, came right back down, traded all the way through that range, pierced through the low, and then closed just inside the low of that bearish spinning candle. What I want to do as I introduce this indicator toolkit for TradingView.com is I want to look at how we can get into this trade at 131.25 or better at the very, very top when it looks like it's about to break out above that high. How can we get into that trade at better than 131.25 and trade that entire move down through that range? To introduce the toolkit, the very top study is a buy-sell indicator based on price action metrics. On either side, right or left, you have a price scale. There is a chart label there, either blue or green. If we have a blue price label on top, that is a sell signal. If we have a green price label on top, that is a buy signal. The same holds true for the main chart. If we have a green price label, that is a buy signal. If we have a blue price label that is on top, that would be a sell signal. We also have on the main chart a trend study, as you can see by the green cloud. And then, of course, the last couple of days of last week, we made a transition over into a bearish trend condition for the British pound and Swiss franc, as you can see by the blue cloud. On the lower study, we have a momentum indicator that works similarly to an RSI. When we break up through that bottom line, that is a buy. When we break down through the top line, that is a sell. The bars indicate the actual momentum metrics, whether they are increasing, decreasing, or show a predominantly bullish or bearish sentiment. So let me get us over to a 1-hour chart and let's look at this trade as to how we can get into the very top with very limited risk. So the first thing I want to mention is when we set a stop risk level or a static stop, we want to set that stop based on the range of the candle we are making our trading decision on. So when we look at this particular trade, we have a sell signal on our main chart and on our upper study, and we have a breakdown where we break down through that top line on our momentum indicator with decreasing momentum metrics. So we want to sell here at this close at 131.27. The range of this candle is from 131.14 up to 131.35. That's 21.5 pips. So from 131.27 at this close, we are going to short this position and set our stop risk at 148 on this trade. So let's go through this trade a very quick minute and see where we end up. When we look at this next candle, we have a move higher, but we only get up to 131.44. We do not break our stop risk level, and we do continue downward. We get down to trend support, and we can follow this trade along with all of the buy-sell signals. You can see we still have a sell condition on our main chart, and then it switches over. There's a new buy condition as we enter into a bearish trend. But we are going to remain short based on our entry and our thought process that we might go all the way back down through that range one more time. As you can see, we do not break our trade entry level, and we trade all the way down to a new low where we begin to make a reversal here. This is CIS Trading at thinkorswimtoolkit.com.